Hey, I wanted to provide a financial update. It's November 1st, 2021, and it's important to know where we're at financially, especially since we're in an expansion project. I got my President of the United States mug right here, reminding us to pray for our president. He needs all the prayer he can get, praise God, and don't we all? So, state of the finances. Here we go. We're going to talk first about income. Church income thus far this year. And consequently, there is a document that I've sent to your email, which you can follow along with some of the numbers I'm going to share. But church income this year is stronger through October than any year that we've ever experienced. General tithes and offerings are up approximately $50,000 ahead of last year. And when you factor into general tithes and offerings, when you add in designated offerings, which include building expansion fund offerings and restricted income, our church income through October is over $500,000. And so this is approximately $50,000 ahead of 2020. So that's good news for church income. Looking at child care income, I need to give a little backstory here. 2020, last year, was the COVID year, the year that COVID actually hit. I guess this year has been a COVID year also, but COVID hit in March of 2020. When COVID hit, our child care center enrollment dropped from, I would say, Carter will have to, give us an exact number, but approximately 55 or 60 kids down to 19 in March of 2020. And we stayed with low numbers and slowly built back up through the year. Now, you would think that since our enrollment was down beginning in March of 2020, that the income in 2020 for the child care center was lower. But instead, the state contributed additional money to child care centers and actually paid for every kid that was on the books, whether or not they attended at the center, because they wanted to make sure that child care centers stayed open. And so 2020, from a child care income perspective, was the biggest year ever. And it's really not a valid comparison point, numbers-wise, to this year. But this year, we can look at numbers from 2019 against this year and get probably a better assessment. And this year so far, our enrollment numbers are okay. We're at approximately 40 to 45 kids, but they're not exactly where we want to be. There's a couple of things that have affected that. Back in February, March timeframe, we were renovating classroom 2 and creating a hallway downstairs, which is essential, a required step toward the building expansion project. But the downside or the flip side of it was that we couldn't fill up classroom 2 during that time period. And so there was a little bit of a lag in refilling that classroom. Then we moved toward the summer. Summer enrollment can be up and down a little bit. We didn't have as many school-age kids this year. Then we got to the end of the summer and the Delta variant of COVID-19 hit. And so that affected enrollment. As you know, there's also worker shortages that every industry has experienced to some degree or another. Well, we're at a place right now, the child care center is, where Pastor Carter and his front office team have done a great job of hiring some quality workers. We have some great workers, and most of the staffing shortages are mitigated. We had a couple of perturbations with enrollment with bus driver shortages, and so kids, school-age kids, could not get to the child care center. So there's all these small factors that have played into the whole. But right now, we're at a place where we are working to increase enrollment. And so we're at approximately 40 to 45 kids that come on a daily basis. And there's a goal that's been set out this year to increase our enrollment back up to 60 kids. Number one, we're a ministry, ministering to the kids and to the families, Christian values. But secondly, we also garnish additional income when we maximize our enrollment. And that helps us from a building expansion perspective. And so it's a goal to increase our enrollment back up to 55 or 60. And then once we are complete with the expansion project, of course, we'll be able to move into some of that classroom space as well. So our private pay number of clientele is down from what it was in 2019, and our public DSHS supported is also down. So again, it's a goal to increase our enrollment by 15 or 20 additional, and we're going to keep working toward that. All right, let's talk about expenses. Since we're in an expansion project, our expense patterns have been different than they typically would be. And so what I did is I asked the accountant to pull all building-related expenses out of the financial picture for the purpose of a simple comparison between this year and 2020 and 2019 as far as our expense patterns go. When she did that, what we found is that we're on par with those 2 years. We're spending about the same amount between all church-related functions, ministries, and childcare-related expenses as well. And pulling all building-related expenses out of the picture demonstrates that we're up $80,000 this year in net income, okay? And so that's good news. That means we have positive cash flow. We're in the black, okay? And now when we assess then building-related expenses, I want you to understand that the way we have building expenses broken up in our financial accounting software is that we have 3 categories for building-related expenses. Equipment and furnishings is one of them. Upkeep, repair, and renovation is another. And building expansion is a third. Upkeep, repair, and renovation includes remodel type activities, a new roof, new equipment such as, a heat pump if you need it, all that type of stuff. And last year, of course, 2020, our major upkeep, repair, renovation expenses were related to the sanctuary remodel. And by and large, that's done, and we haven't spent much in that area this year. But we did have 2 major expense points in upkeep, repair, and renovation. The first one was the renovation of Classroom 2 along with the addition of the hallway downstairs. Now, that was required for building expansion, but we've kept the expense portion of that designated toward upkeep, repair, and renovation. That's an expense that we could not submit for reimbursement to Department of Commerce, okay? And so that alone cost us just shy of $40,000. Even though it's tangentially related to expansion, it's considered upkeep, repair, renovation. The second major item there was the addition of playground equipment in field number 1, along with a fence, some more playground chips, and pea gravel in field 3. All of that was required from a state early achievers child care licensing perspective. It cost us about $20,000. The good news in that is that last year we received a grant from early achievers for $11,500, and so the real out-of-pocket cost was about $8,500 for that upkeep project. Now, looking at expansion itself, thus far this year in 2021, we've spent just north of $500,000 in expansion. Okay, so you say $500,000. What has that got us? Well, that's over $80,000 in excavation costs for removal of the dirt, but also layering down the gravel and preparing the pit for work. That is $100,000 this year alone for the soldier pile wall. The whole soldier pile wall cost $144,000, and $100,000 of that was spent in this fiscal year, 2021, to complete the project. We have spent $100,000 in our fire suppression system to Red Hawk flow systems, and that is a total price tag. The fire suppression for the existing building and the new building is a total price tag of $149,000. So this year, thus far, we've spent $100,000 of that $149,000. And the reason we spent $100,000 is because of their billing schedule, which we have to follow. So we're putting more of the money up front before the work is done, but they're going to complete the work into next year, and it'll cost us a total of $149,000 when all is said and done. What else is in there? There's $100,000 plus in labor, contractor fees, and materials thus far, and there's $41,000 this year in permit fees. There's $64,000 in additional engineering fees and $24,000 in architectural fees. So most of our architecture is done. I did contact the architect, and he doesn't anticipate much more in the way of costs from Williams Architecture, which is fantastic. Okay, and so that is the status of building expansion expenses, approximately $500,000 thus far this year. And of course, there's more to go as they pour the foundation and then we get into framing, etc. Right now, our expansion fund is just shy of $200,000. We have another grant reimbursement to submit here in the next month. And once we have that submitted, our expansion fund will have $220,000 plus in it, okay? In addition, we have a remaining $360,000 that we can draw from the grant, okay? So we have spent a portion of the $539,000 grant money, or we've accessed a portion of that, but we still have $360,000 after this next submittal that we can spend on that. And so if you add those two numbers up, we're looking at $580,000 in available funds for the expansion project, plus what has been committed in expansion pledges, okay? So I just talked about what we have as available cash, but we also have pledges that will be coming in. Consequently, we have a series of pledge statements here going out this week that will be sent to individual donors as an updated status of where they're at with their pledges, and also a reminder of the pledges, okay? And so in addition to all that, in our savings account, we have $260,000, okay? And so we don't plan to tap into savings for this, and we're just gonna continue to pray for God's provision in all of it. All right, so finally, the takeaways in this, just to recap. We are in the black this year, moving ahead strongly. Church income is at an all-time high. Working to increase the child care enrollment, which will increase child care income. Watching our expenditures. No other major projects are scheduled with the exception of the expansion project this year. As we go into November, going to be looking at the budget for the new year, cognizant of the fact that minimum wage goes up by 80 cents an hour here in January. And so we're anticipating that here in the new year, but it'll all be factored into the budget. And so if you have any questions on the financial update, just reach out to me. We'll meet this year here as we go into the month of November or December. But things are looking good so far. Continue to pray for God's favor and provision. Just a great testimony when John was able to secure some of the wood in our project at a lower rate. And so we want more success stories like that about cost savings, God's provision, and coming into November here as well, I would like to have him put out in front of the congregation a update as to where we're at in our Forward in Faith campaign, and also maybe even a reinvigoration of that campaign to add more donors into the campaign. So again, reach out with any questions. God bless you. We'll talk to you soon.